Good evening. Thank you for joining me. And for those of you who are joining from Japan, ohayo gozaimasu. Uh, I suppose this is a pretty interesting crowd because I'm actually not very used to talking to, I guess non-American business, owners. So this is actually pretty exciting for me. My name is Rio. I work in the, research department of the Federal Reserve Bank of Philadelphia as an economist. Half of my time, my responsibility is to actually give this type of business, update on what's going on with the economy to the American public. So one of the, less, and this is obviously my shameless, self promotion, but one of the, less known services of the Federal Reserve is that any public organization, such as this one, who's interested in, inviting a guest speaker from the Federal Reserve is actually, encouraged to actually ask, request a speaker. And usually from the Philadelphia region, it'll be myself or some other, person from my team. But all 12 Reserve Banks have some kind of outreach program. So, if you are not from the area and are interested in inviting a speaker for something like this, I highly encourage you to, go to their website and, inviting, one of us. It is a free program. We don't charge anyone for this. So, I think, I hope you find this interesting. So let me actually just go ahead and share my screen so that I can show you what I'm about to present. Can everyone see my screen? Great. So I'm seeing people nodding, so I'm assuming that people can see this. So welcome again. Thank you for joining me. What I thought I would do for you is to give you a brief update on what's going on with the economy. And since this is a joint program with Japan American Society of the Greater Philadelphia, I thought I would spend the last half of my presentation talking about what does this mean for particularly trade relationship between Japan and the United States. Unfortunately, many things have changed since February, as we all know. We have been working from home almost 100% for this is my third month working from home. I have been giving a lot of virtual presentations, doing a lot of research on COVID-19 and the effect of the disease in the economy, particularly into the economy of the Pennsylvania. One of the things that will probably never change about my job is the fact that I still have to give a disclaimer. So bear with me. The views expressed this afternoon, evening, morning, wherever you're from, are my own and do not necessarily reflect those of my colleagues at the Philly Fed or the Federal Reserve System. So with that out of the way, let's get to it. So, for those of you who are dying to know what the initial message is, I thought I'll just give you the punchline first. So what's actually very shocking about this current crisis is the fact that the United States economy has been enjoying a very, very long period of economic prosperity for quite some time. As a matter of fact, as you may know, we were in the midst of the longest expansionary period in the modern economic history since 1850s or so. And of course, the economy literally shut down in mid-March. And clearly, evidence so far suggests that we have seen a deterioration in both consumer spending and both that and business investment. So we know that even before the Q2 data come out, and at the end of July, we're going to see we are experiencing pretty bad economic downturn in Q2. With that said, we are starting to see some initial evidence of recovery, as you'll see in a minute. But how fast and how quickly we can reach to the sort of the pre-crisis level remains largely unseen, just because there's just so much uncertainty going on, which I'll go over in a minute as well. So I understand that I have about 20 to 25 minutes for my presentation, and then I would like to make sure that I leave plenty of time for questions. So what I thought I would do for you this evening is to talk about, primarily what's going on with the economy. And I said, the effect so far to Main Street USA. And then I'll spend a little bit of time talking about what does that mean for, US-Japan trade relationship. And then the last few minutes, I'll talk about, what does it mean for the future and what type of data we should be looking at in order to assess the near-term outlook. All right. So without further ado, let's actually jump in by talking about gross domestic product, everyone's favorite subject. So GDP, or gross domestic product, if you're not familiar with it, it is the the widest measurement of economic health available in the United States. So what you're seeing in front of you, first of all, is the overall growth, the annualized quarterly growth rates up until Q1 of 2020. So like I said, Q2 data we won't see until the end of July. So the latest data we have is for Q1. And as I said in the beginning of my presentation, what was surprising is that as recently as mid-February, many economists, including myself, were predicting a growth rate of around 2% for the remainder of the year. And we actually are required to make a prediction every quarter. Back in on Valentine's Day this year, we made a prediction of about 2% growth for the remainder of the year. So again, what's shocking about the current situation is that the sudden halt in the economy and the contraction following that was actually more than enough to wipe out whatever growth that we had in the first 2.5 months of the year, which is incredible. So in order to further understand, the growth rate, let me actually, dive deeper and talk about the components of GDP. So if you have taken any macroeconomics classes, you know that GDP can be broken down into several components. So you have consumption, which accounts for about 70% of the GDP in the United States. Both investments and government spending each accounts for about 17%, 1/7. And then since the US is a trade deficit nation, exports minus imports, or net exports, if you will, accounts for about -4% of GDP. So, knowing that context, we can actually talk about, what components were particularly hit hard, and what components, we could actually try to salvage for the next couple of quarters or so. And in the interest of time, I know it's all exciting to talk about all these components. I thought I would actually focus on two things. So the first thing I wanted to focus on is the blue part of this graph, right? So that's the consumption part. So if you ask any economist in the US about what's going on with the economy, really the rule of thumb that we use is that, if the consumption part of GDP is doing well or doing badly, then that probably reflects what's going on with the overall economy. And that's largely because it accounts for a majority of our economy, 70% of GDP. That's more than 2/3. So clearly, when you ask an economist about what's going on with the economy, we care a lot about what's going on with the consumption. And clearly, you can see from this blue part of the graph that in Q1, the consumption level actually dropped by almost 7%, which is actually the largest drop since the last Great Recession. And then the next thing I wanted to focus on is the green part, investment part. So investment spending in the United States has been actually pretty low for quite some time, at least since 2018. And so when I gave a similar presentation to a different group last year, people asked me why was business investment so low. Well, last year we actually had a different type of uncertainty coming from trade policy. The lack of growth in this green part of the graph from last year came from uncertainty in growth. And then obviously for 2020 Q1, the negative growth rate for the investment portion of GDP actually, of course, came from the COVID-19 crisis. So, in the interest of time, let me actually, focus on those two parts of GDP so that, we understand, some of the data set that, we track in order to assess the economy. So let me first actually talk about the business portion, the green portion of the graph, because I think it's very important how our businesses feel and how our businesses perform when we think about recovery. So another lesser known fact about the Philly Fed is that we also do provide a lot of research material, and also we provide a lot of data sets for people to use. I would say that one of the most widely used data set that we produce among media is what's called a Business Outlook survey. So this is actually a monthly Business Outlook survey, and we basically call up about 300 to 400 business leaders across our district. And by the way, our district covers most of Pennsylvania, all of Delaware, and southern 9 counties of New Jersey. And we basically ask them a lot of questions about what's going on with their economy, what's going on with their particular businesses. And we ask them about 40 to 50 questions. I'm sure everyone is dying to hear about all 50 questions. Unfortunately, I don't have time to talk about all 50 of them, so I will spare you the detail and only talk about the first two questions that we asked. So the exact question that we asked in this survey is, compared to last month, did your business do better, worse, or about the same? And the results you see in front of you is indicated by diffusion index. And diffusion index, if you're not familiar with it, this is basically the percentage of people saying, yes, we did improve compared to last month, minus the share of those who said no to that question. So rule of thumb, whenever you see a positive number in front of you, that means that the majority of participants said that, yes, they did improve compared to last month. And what you're seeing here is actually a pretty obvious pattern, right? So, until the COVID-19 pandemic hit, vast majority of the business owners around their district were feeling actually pretty good about their business performance. And then, of course, that actually dropped pretty significantly both in March and May, in April. While we did see some recovery in May and June, you can see that those numbers are actually much lower than where they used to be. So really, what our business owners in our district are feeling is that they are still feeling they definitely felt a very negative effect back in March and April. While they are starting to recover from that worst outcome, I would say that the vast majority of the people are still feeling very uneasy about their economic performance. And the second question that we ask in the survey is actually about the future. So the exact question is, 6 months from now, do you expect your business to do worse, better, or about the same? Again, the results are presented in terms of diffusion index, which means that, again, percentage reporting increase minus those reporting decrease. So this is where it gets a little interesting in terms of the difference between the manufacturing folks and the non-manufacturing folks, right? So, the orange line, which represents the manufacturing firms, you can clearly see that, these folks are, much more optimistic than their non-manufacturing counterparts. As you can see, if you look at the blue line, for March and May, both March and May, we saw the sudden drop in the blue line, which means that the majority of the non-manufacturing business owners were actually feeling very bad about the future potential outcome. With that said, we did see some improvement in June. So you can see that the reading for manufacturing is 66.3, whereas the reading for non-manufacturing folks was about 40.5. So again, we are starting to see some improvement in the business confidence indices among our area, but I would say that we're a long way before we can actually consider a full recovery. So one thing that's that's actually very important when assessing the health of the economy is obviously what's going on with the labor market. So I wanted to first show you the change in monthly payroll employment. So for those of you who have not seen this data before, each of these colored bars basically represents the monthly net gain or losses, for that matter, in terms of the payroll jobs, right? So if you focus on the last two red bars, for example, you can see that for the first 2 months of this year, 2020, we have added more than 200,000 jobs per month, which, by the way, is has been a great number. So again, this is obviously pre-pandemic, and a lot of economists were expecting this number to continue throughout the year. So let's actually add the past 3 months worth of data to see what happened. So if we add the data for March, April, and May, you can see that everything else basically dwarfs, right? So we were very happy with 200,000 jobs on the net, and of course those numbers basically became meaningless for the past 3 months. We did see a sharp drop first of all in March, and then the largest drop ever, more than 20 million jobs lost in the net. In May, we did have a surprisingly positive job report of 2.5 million jobs, created on the net. But I should point out that, even with the 2.5 million jobs added, we're still about 20 million jobs less than the February level. So I know that a lot of people were excited to see the, very positive job numbers in May. But again, I think it's not exactly the time to celebrate just yet, just because we're still way below where we used to be back in February. Another point of concern is the discrepancy among different sectors. So first of all, if you look at the annual employment growth by sector, and this is basically comparing the growth rate between May of 2019 versus May of 2020, you can see that all of the sectors that you see in front of you were negatively affected, and as you can see, all of these numbers are negative. With that said, clearly some sectors were affected more than the others. Most notably, if you go towards the bottom, you can see that the leisure and hospitality sector, so that includes jobs like in restaurants, hotels, arts, entertainments, etc. You can see that that particular sector was hit very, very hard. And you can see that even compared to the national average, areas around Philadelphia had a particularly hard time, in terms of that sector. As a matter of fact, from the Philadelphia region, that particular sector lost about 150,000 jobs between May of 2019 and 2020. So that has been a very, very tough, sector to be in. Elsewhere, we know that retail sector also got hit pretty hard. So retail sector is included in the trade, transportation, and utilities sector that you see towards the middle. And as you can see, that sector also lost about 10% of the overall employment rate. So again, the message here is that overall we are seeing overall decline in almost all sectors. But the point that I wanted to make here is that that effect was not very equal. As a matter of fact, a lot of the low-paying jobs, including those in the leisure and hospitality, and also in retail, were unevenly affected, and that's what you've been seeing and hearing in the news these days. And of course, with these jobs getting destroyed, it's no surprise that the unemployment rates, shot up at all levels, right? So the black line is for the U.S., green line is for Pennsylvania, and orange line is for, the local, Philadelphia metro area. And again, no matter which area you look at, you can see that, the unemployment rate actually went up quite significantly for the past couple of months or so. And again, this was particularly shocking for us labor economists, because going into this recession, we were actually experiencing one of the best labor markets probably in the last 50 years or so. At the U.S. level, the national unemployment rate was hovering around 3.5%. And as you can see right now, it stands at 13.3%. So that means more than 1 in 8 Americans are actually now out of jobs. So again, with this sudden shutdown in the economy, a lot of people have been out of job, and a lot of jobs have been lost. And obviously, that leads to jobless rates, or the increase in that particular statistic. So in the beginning of my presentation, I talked about how I will be talking about both businesses and consumers. So this might be a good segue to start talking about consumers. So I like to talk about the labor market outcome before I talk about consumers, because I think a lot of these two topics are intertwined. So again, because the labor market outcome is so terrible, what did that do to our consumers? Well, first of all, the confidence among consumers in the US went down pretty significantly. Again, going into this pandemic, the consumer confidence indices, no matter which particular statistic you look at, has been going on at a pretty high rate, well above 120 for Conference Board's measurement, and well above 100 for the University of Michigan measurement. So again, no matter how you look at it, I think the poor performance in the job market led to a pretty sharp drop in consumer confidence indices. And of course, what does that do to consumers? Well, no surprise, consumers actually stopped spending, both because, first of all, they were not allowed to spend during the shutdown, and also because they were actually concerned about what's going to happen with their financial stability. So just to give you some examples about what happened with the spending, this is the first graph I wanted to show you is the monthly spending on motor vehicle and parts. And as you can see, for quite some time, spending on motor vehicle has been actually growing pretty substantially going into this pandemic. And you can see that there's a very obvious drop for more than 30% drop. Between February and March, further drop in April as well. In May, we did see some, bounce back from the, terrible numbers that we saw back in March and April. But I think, this bounce back, to me, the interpretation, at least for me, is the fact that, a lot of people, were waiting for the dealership to open. So I think the main numbers are a little misleading. I think with so many people out of job and so many people losing income, it's hard for me to imagine that these numbers will keep, continue growing. So, the main numbers were, surprisingly positive. But unfortunately, my prediction is that these numbers won't stay up, as you're seeing in front of you. Another area that we saw in terms of change in consumer behavior is where are we getting our food, right? So the red line in front of you is the monthly spending on food services and drinking places, which is basically a fancy way of saying restaurants and bars. And as you can see, obviously, because of the shutdown and, clearly people, had to, not spend money in restaurants and bars, we did see a very sharp drop in spending on that, that particular sector. Of course, people still had to eat. So where did we get our food? Well, from food and beverage stores, namely grocery and liquor stores. So we are seeing some pretty huge impact in terms of changes in consumer behavior. So when we think about, recovery from this pandemic, we need to be thinking about, how did this affect consumers, consumer behavior? Was it temporary or was it permanent change in behavior? Right now, it's hard to tell, but the data do suggest that this might be a permanent change instead of a temporary change. So speaking about different services, and before I talk about what does it all mean for a Japan-U.S. relationship, I thought I would also talk about one of the areas that got hit the hardest, which is the tourism industry and the travel industry. So what's interesting about I guess this pandemic is that a lot of companies and a lot of institutions decided to publish more higher frequency data for researchers like us to use. So, for example, TSA now actually publishes out the daily data on how many people are basically flying, right? So how many people go through checkpoint travel. So as you can see, compared to the same weekday exactly a year ago, you can see that the number of people who are traveling by air has actually dropped significantly. And as you see in April and May, that was running essentially zero. With that said, we are seeing some recovery in June. So the latest data that I got from I guess earlier this week, we're running at about 75%. Below where we used to be back in a similar weekday of 2019. Still, it is a recovery, yes, but clearly nowhere near where we used to be. And of course, this includes both domestic and international flights. So as you can see, when we start thinking about how does this affect other countries and how does it affect our trading partners, it is very clear that the one way in which this is affecting is the travel industry. I don't have a very specific statistics about how many people from the U.S. traveled to Japan, but clearly, judging from the overall statistics, right now not many people are traveling to Japan from the United States, which clearly is going to have an impact on Japanese tourism industry. So now that I've started talking about how does this all affect the trade relationship between Japan and U.S., let me actually give you some statistics on both the exports and imports data. So this is again a monthly data that I got from Census Bureau, and the latest data that I have is for April. And so each of these lines represents the spending. A blue line being the imports from Japan, and the red line being the exports to Japan. So when you look at this graph, two things actually immediately stand out. So the first thing is that if you look at the red line at the bottom, you can see that exports to Japan, or the dollar value of exports to Japan, actually did not change almost at all, which was actually pretty surprising. But what did change was, the value of imports from Japan, which is the blue line above that. It went from, almost $12 billion to less than $10 billion in a matter of months, right? So when we think about, how has this pandemic being affecting the relationship between the U.S. and Japan, I would say the imports has been affecting this, the relationship in terms of imports has had a greater effect so far. So this is actually very interesting to think about when we actually rank these trading partners between U.S. and the rest of the world and the relative importance of it. Because the next slide that you're going to see is that despite the fact that we didn't actually see any changes in terms of exports to Japan, the relative importance of exports to Japan actually went up pretty significantly. So this is basically the same graph that you saw before, but I divided it by basically the total trade, right? So the blue line is the share of Japanese imports divided by the total imports that the U.S. imports, and then the red line is the exports counterpart, right? So what's interesting here is that despite the fact that the amount of exports from the U.S. to Japan did not change at all, you can see that the relative importance of American exports to Japan actually shot up pretty significantly, right? So you can see that before the pandemic, relative importance of Japanese exports, U.S. exports to Japan was running around 4.5%. And now the in April number shows that that actually shot up to almost 6%. So when you look at the numbers, what actually happened was that if you look at the Japanese imports numbers from the rest of the world, you saw that American exports to Japan didn't change. What did change was that exports from other countries to Japan actually changed pretty substantially. So if you look at Japanese imports numbers from other Asian countries like China, Korea, Singapore, all those countries actually the exports to Japan actually went the growth rate of those countries went negative. So relatively speaking, when you look at some of the exports data, you can see that the relative importance of U.S. exports to Japan actually increased quite a bit. So if you're wondering, if you're wondering, what are some of the stuff that the U.S. buys from Japan, I also have some, interesting comments, comparing April 2019 to April 2020. And so before this whole pandemic hit, you can see that, I guess the main products that, the U.S. buys from Japan is basically cars. So transportation equipment is at the top. Followed by machinery. So a lot of heavy machinery goods, as you can see. So fast forward 12 months, what changed? Well, in terms of the what stuff U.S. buys from Japan, that actually has not changed that much. So if you compare the red table for April 2020 against the blue table, which is April of 2019, you can see that the components of the imports from Japan actually have not changed almost at all. What's changed was actually within those components, the imports value actually went down significantly, particularly the top two. So between April of 2019 and April of 2020, transportation equipment, basically a fancy way of saying cars and trucks, that value went down by almost $2 billion. So again, as we think about consumer behavior and changes in consumer behavior, again, it is actually interesting and important to think about what are the things that the U.S. buys from Japan, and when we think about how do we actually recover from this, again, it's important to think about going forward, what can American public can or would want to be spending their money on. Clearly, the data shows that some of their consumer goods, particularly the expensive consumer goods, we are seeing some major decline in that, as you see from the data. So turning into some local data, I was able to find some insights about what's going on with Pennsylvania. So we don't really have a very good data in terms of imports from Japan into Pennsylvania, because international trade obviously is done by the country level. But what we can do is think about what Pennsylvania actually sells to Japan. And so when we think about the total exports to Japan, which is what you're seeing in front of you, you can see that the story for Pennsylvania is actually the direct opposite of the overall nation, right? So a couple of slides ago, when I showed you the overall national data, you saw that the exports to Japan actually did not change at all. Well, for Pennsylvania, that's actually not true. You can see that the exports number actually went down significantly. And the reason for that is basically, has to do with, what does Pennsylvania sell to Japan? So here are the top Pennsylvania exports to Japan. Because we are in the, because we do have a pretty large, natural resources sector, you can see that the top commodity that Pennsylvania sells to Japan is actually I guess the category is minerals and ores, but it's really coals. So Pennsylvania coals to Japan has been the largest exports to Japan. And if you look at the similar data for 2020 Q1, that amount was cut by almost half. So again, when we think about what is the overall effect of this pandemic to sort of this international trade at the local level, you can see that this can actually affect the relationship pretty, I would say, pretty significantly, where we went from almost $200 million worth of coals that we sold to Japan, and that value is now dropped to basically half. So again, I would think that this again the story about exports that would really depend on the consumer behavior changes in Japan. So we were going to have to see how does Japanese public react to the pandemic going forward, and that's going to have a pretty significant effect on the amount of stuff that Pennsylvania sells to Japan, and by the way, by extension to the rest of the world. So I know I'm almost out of my self-imposed 20-25 minutes. So I just wanted to end my presentation by talking about what should we be looking at? What's next for particularly U.S. economy? So we're basically making a full circle back by talking about GDP. So this is basically the same graph that you saw earlier in my presentation. You can look at any of the forecasting models out there. My preferred one being the Survey of Professional Forecasters. That has nothing to do with the fact that we run it in our research department. But all jokes aside, if you look at any of the forecasting models out there, I think the consensus among the economists is that Q2 is going to be pretty terrible. From what we already know from April, May, and so far in June. With the consumption down, with the labor market, being so terrible, it's no surprise that the current estimate for Q2 is about 30 to 40%, negative 30 to 40%. Where there is substantial debate is basically what happens next, right? So basically, if you look at the results from the Survey of Professional Forecasters, some of the economists tend to believe that a strong recovery is possible starting with Q3, and that's going to basically be steady growth for the rest of the year. And I just wanted to mention that this is a median forecast, right? So that means that the median forecast was 10%. That means that there were half the people who thought that it was going to be less than that, and half the people thought that was going to be more than that. And when you actually look at the data, there has been a very big variation between what economists predict the recovery rate is going to be. So what makes this pandemic, more challenging in terms of, our job as a, economists to predict the future growth rate is the fact that there has been so much uncertainty going on with the economy, right? So I just wanted to end my presentation by talking about, what are some of the factors that we're looking at in terms of uncertainty and some of the factors that can drastically change the outlook. So first and foremost, this is a crisis that's caused by pandemic. So clearly, until the source of the pandemic is, resolved, it's very unlikely that we're going to go full recovery, right? So be it a vaccine or some kind of effective treatment. Consumers would like to know the timeline for that before they commit to big purchases like cars and houses. Even before we get that, another factor that's affecting the outlook is the fact that right now we probably don't know as much as we should be knowing about this virus and the related disease, right? So there has been a lot more questions than answers regarding the disease and the virus. So just having a better knowledge about the virus is going to change the outlook pretty substantially for the next couple quarters or so. And then, of course, all of this is going to affect the business decisions by, both, Japanese and American business owners, particularly in, Pennsylvania, New Jersey, and Delaware, where, we started opening up the economy slowly with some restrictions, right? So you can easily imagine a scenario. For example, I live in New Jersey, so and there are, some of the restaurants are now allowed to, open their indoor dining with 25% capacity. You can easily imagine a scenario where for some smaller restaurants, it may actually not even worth it for them to reopen just because, they won't be able to break even with 25% capacity. So I think there's going to be a lot of trial and error about, among business owners about how they're going to conduct their businesses going forward. And of course, the flip side of that is, again, I've been talking about this a lot, changing consumer behavior, right? So by now, I think there has been at least a couple of dozen papers using people's, cell phone GPS, data that shows that, even before, different states had put, state mandated, shutdown orders, general social activities actually, dropped pretty significantly. So, which means that, the American public were actually already in the self-quarantine mode even before the government told them, to basically stay at home. So it's actually, very easy to imagine that, even after, all the governors say that, yes, we can reopen fully, it's actually very easy to imagine that, we're not going to go back to, full, social activities, until consumers feel confident enough to do that. And another, concern among the consumer is that, again, because the labor market has been, so terrible with so many people losing jobs, and again, even among who are still employed, with so many people basically, have to accept lower salaries. There's also a question about, what are American people going to do in terms of buying stuff. I've already talked about how people might be more prudent about how they might be spending their money going to the future, because if they are not so sure about their future income, they might actually hold off in terms of buying expensive stuff like cars and houses. So again, right now it is very much unclear how consumers are going to react, but that's definitely going to change the outlook for the future. And then last but not least, I think there is some concern about if and when of additional, aid packages coming from the Congress, right? So CARES Act was great, PPP was great for businesses and consumers, but as you may know, a lot of these, government aid packages are coming to an end. Most notably, one of the biggest, I would say, one of the biggest thing that came out from the CARES aid was the extra $600 a week of unemployment benefits. Well, that is going to end at the end of July, and we have no idea how people are going to react, after that. Are they going to go back to, to their previous jobs, or are they going to keep being unemployed? So already, I do think a lot of Americans are, expecting another round of aid package. As a matter of fact, our colleagues in the New York Fed did some interesting survey asking about exactly this question back in April. And according to their survey of public policy, more than 50% of respondents are actually expecting another round of aid package from both the Congress and the Federal Reserve in the next 12 months. So again, if and when of the additional round of aid packages is going to change the outlook pretty substantially. So I know people may have a lot of questions, so just a quick recap of what I talked about. Clearly, I probably didn't have to tell you this, but the economy, both in Japan and U.S., have been pretty negatively impacted by the pandemic, to say the least. And as you can see from the both consumers and firms side, we are seeing some sharp decline in spending. While there are some good news coming from both the consumer spending and the business sentiment numbers, I think it's a little too early to be celebrating. I think we are still in the very, very early stages of recovery. But again, this can change pretty drastically, depending on what happens with all of the uncertainty going on with the economy. So before I take any questions, I just wanted to make sure that I give you my contact information. So if I run out of time or if I don't know how to answer some of your questions, please feel free to reach out to me by email. I did actually send a copy of these presentation slides to Lois. So if people are interested, please contact her and she'll probably be able to give you a copy of the slides. So I know I've talked a lot and probably threw a lot more information than you ever wanted about the economy, but are there any questions?
I just want to, this is Lois, I'm sorry I was late. I just want to take a minute to thank Royo and appreciate all that information. And if I can, I'll ask the first question. Sure. What kind of information would it take for you to start making predictions about consumer behavior? I'm really concerned about the travel and the tourism, and particularly, as it affects some of our interchange with Japan, but also, personally to travel to other countries. I'm wondering if you see that coming back.
Yeah, so that's literally $1 billion question, right? And I think, again, until consumers feel more confident about going about, doing things that we used to do, at the very least, we won't be back 100% anytime soon. I think one of the reasons why we were, a little bit excited about the May consumer spending report was that, we actually saw surprisingly positive numbers. But upon examining those numbers, the overall consensus among economists was that a lot of those spendings came from basically, people who were going to make those purchases anyways. If you look at the auto spending, for example, we saw very surprising, strong numbers from auto spending, but with so many, manufacturers giving out incentives and both in terms of purchases and loans, I think, if people were already in their, in the market to buy a car, they would have already done so. Where I'm most concerned about is about the future, right? I feel like I'm repeating myself, but again, with so many people, losing their incomes and jobs, it's very, very hard for me to imagine a scenario where people would all of a sudden go back and buying, houses and going to expensive, vacation and such. I mean, with that said, I'm sure there will be people who do that. And that's great, that's their decision, but with 20 million people in this country out of a job, I just can't see a scenario where we would be going back to consumer spending, stronger consumer spending that we used to see back in February anytime soon. I think it's going to take months, years to see full recovery.
Okay, we have a question from Adelaide. How do the results for Region 3, Japan trade numbers compare with the other regions in the U.S.?
Yeah, so that's a great question. I think I think regional numbers can be very volatile because I think some regions are heavily dependent on certain industries, right? So if you look at, say, relationship between Texas and Japan, for example, they're also a heavily energy market, for example. So we did see a pretty sharp drop in the the export value from Texas to Japan or the rest of the world, and that's due to two reasons. One was a drop in demand for oil in Japan or everywhere else in the world, and also we did see a very sharp drop in oil prices. So if you are in energy states like Texas, the Dakotas and such, we did see a very sharp decline. Otherwise, I think, otherwise, I think, states like Pennsylvania, we did see, decreases in coal because we are also a pretty, I guess, mixed energy state. Elsewhere, I didn't see that much change, mostly because a lot of the Midwest states don't really do much trade with Japan. A lot of the if you talk about the overall trading businesses, between the U.S. and the rest of the world, by far the largest trading partner of the U.S. is Canada, and second is Mexico. So a lot of the Midwestern states, they do trade with Mexico and Canada, not so much with Japan. And if you do look at the data, you will see that trades with Canada and Mexico actually also went down pretty sharply.
Okay, we have another question from Bill. What do you think is the biggest factor that will affect the speed of our recovery?
Do I have to pick one? So I think, again, first and foremost, because this is a crisis caused by pandemic, I think the solution needs to come from our scientific community. I just can't see a realistic scenario in which we'll go full recovery unless we have either vaccine or effective treatment. Without that, I don't think consumers will be, I just can't see consumers will be, going back to packed Eagle Stadium, for example, anytime soon without having, without knowing that, they'll be okay. So I think that's going to be a number one factor. But again, even before that, I think we do have to have a better understanding of what this virus does. Right now, there's too many questions that are unanswered. There has been some debate about how does immunity work for this disease. So I think these are questions that are much better suited to ask for to our scientists. But I think in terms of economic recovery, that's the fundamental problem. I think without taking that root cause of the problem away, that's going to be always in our back of our minds.
Okay, we're taking more questions if anybody else has one. Here we go. How about COVID-19 reactions in Japan? Are there politicians urging too rapid reopening? Any politicians not wearing masks, urging others to get out and spend?
So, I study, American economy and not so much Japanese economy. So I may not be the best person to be answering this question, but from what I know from various papers and such, I believe the Japanese government did not have the same authority as the state governments in the United States, right? So all of the the policies that they had in Japan were basically suggestions, and they were asking their citizens to, stay at home. But unlike, what we saw here in the United States, these were not mandatory orders. So I think that was the biggest difference.
Okay. Do we have, okay, here we have another question. How does one make predictions of the nature of the recovery, or whether or not there will be a recovery of unemployment, GDP, et cetera, using current data?
So that's a very tough question to answer. And I think, one of the reasons why the professional forecasters had such a wide range of estimates was because of the difficulty in making making such prediction. In terms of labor market outcome, we actually have a pretty solid understanding of what sectors were hit the hardest, for example, and what sectors were less hit the hardest. In terms of that, we can make a prediction in terms of if people have if people are, for example, in a sectors that that are I should say less impacted by the COVID-19 pandemic. We know that those sectors are pretty stable, so we can actually focus our analysis on more heavily impacted sectors like tourism, like retail, and accommodation. So when we look at these numbers, we tend to heavily focus on some of those subsectors. So right now, when you look at the data, for example, in our region, for example, I know retail is very important. So we look at retail and how the retail sector is recovering in terms of employment. When I look at economy for Southern Jersey, for example, we also look at tourism and how does that how are the numbers in that particular sector looking. So by focusing on some of the sectors that are most heavily impacted, we can actually have a better understanding of the effect of the pandemic. But again, the past couple of months, the data have been the data has been going basically this. So it's extremely hard for us to come up with any sort of what the average should be, just because the numbers for the past 3 months have really thrown out our models out of the window. But again, in terms of the sectors that were less affected, we have a better understanding.
Okay, we have another question. With travel now being limited among states within the U.S., is there a risk of extreme localized recession conditions?
Absolutely, yes. And I think that's one of the concerns about some of the communities, right? And I think that was the concerns about the 3 governors, for example, Connecticut, New Jersey, and New York governors that they had. I think the prediction in terms of the if we are going to have a second or third wave, the predictions were more localized instead of having a sort of a nationally widely spread pandemic. I think we would have a more localized focused pandemic. So when that happens, I think that's going to be obviously hitting those local economies a lot harder than the nearby communities. So again, reopening the economy, I understand the I understand why people feel the urge to do that, but I do think that it's very, very important to be mindful that if the disease further spreads, then there is a very real possibility that we're going to have to shut down again. So there's this very real trade-off between the economic health and the public health. And to answer your question, yes, I think there is a very serious probability that certain communities is going to be affected by the pandemic now that people can travel freely.
We have one last question, and then we will close our session. This question also from Adelaide. What about the deficit? Will that be playing a big role in the recovery because of all the monies that have been spent by the federal government to help support people at this time?
Yeah, so in the long run, sure. I think the the long run consequence is going to be pretty severe. But I think right now is from both the Federal Reserve and from the federal government's perspective, I think right now we're trying to look at things more sort of at a short run level. This is a very much a classic Keynesian, as I guess I don't want to use jargon, but this is a very classic Keynesian model where in the short run, when we have so many people unemployed and so many businesses are failing, in order to save the economy, I think the only thing that's basically left to do is to pump in money into the economy. And so we're going to at some point have to deal with the heavily growing national debt, but I think the focus now is to basically try to figure out how to push the unemployment rate below 13% that we have. I don't think that we're going to have a percent unemployment rate anytime soon. But I think the real focus here is to try to get as many people back to work, safely, so that they can actually start making money and spending money. The national debt, yes, I think it's going to be a serious problem down the road, but I don't think of the 100 things that economists are worried about, I don't think right now is that's one of them.
Okay, very good. I just want to express our gratitude to Royo for coming and for speaking to us, and for being part of our community and helping us to build our community, because we are a community and we care about what happens in Japan and what happens here. And it's really nice that all of you joined us. We are the Japan America Society, and we do help sponsor friendship and cultural exchange, and also local celebrations. And please come visit us at Shofuso, the Japan House in Fairmont Park, where the garden is now open. Thank you, everybody, and really thank you very much, Royo. It was very interesting. Yay!
And I just wanted to thank the Japan America Society for partnering with us for this event, and thank you, Rio, for the amazing information. And I also wanted to make a plug. We have a musical performance from a Japanese American artist, and I will post the link to the Zoom session. It's starting right now, so feel free to join us for just a little relaxation to cap off your evening. And thank you all for attending.
Thanks, everyone.
Bye.
Bye.